Good morning everyone, and thank you for joining us on Morning Markets from True Potential. Before jumping into what markets did yesterday and how they performed, I just wanted to highlight the podcast that's coming up on Friday. Please look out for that, where we'll be focusing in on investing, inflation and the UK economy. So looking at asset markets yesterday, we continued to see that positive trend within equity markets that Paul had discussed, that we saw yesterday as well. And really we saw the US coming back from their holiday on Monday and a bit of positive momentum there. But really context is important, and that improvement is really just on the back of a very difficult week last week where US markets, the S&P 500, fell close to 6%. I think today really the focus is certainly on UK inflation. Last month we saw UK inflation rates hit 9%. This month we've moved marginally higher to 9.1%, but that's very much in line with expectations. If we dig into that in a little bit more detail, what were the key areas that were driving inflation? Very much those areas that we'll all be familiar with. That which is related to housing and related costs, and that's energy costs, so electricity and gas. And then the other component of that, transport. And again, that's back to what we're all seeing as we drive past the petrol station on a daily basis, that continued change, or increase I should say, in petrol and diesel prices. So those are the key component areas really continuing to drive inflation higher. And that's an important point, because we are hearing from central banks in terms of their want and their desire to really tackle the inflation backdrop that we've got, given the large gap that there exists between their target levels and where we are today. But then really the key driver there, as we've discussed, is external factors. The strength in the oil price, strength in gas prices feeding through into the domestic economy here in the UK. And that's something that's very difficult or nearly impossible for the central bank to control, because it's an external influence on that inflation rate. So it continues to really just highlight that ongoing challenge that central banks have. And that subtle shift that we're hearing in their policy and their language as well, from one of just actually trying to facilitate inflation coming down and growth muddling along, actually now maybe focusing more on how to bring inflation down and not as concerned on the growth impact that comes through. Looking to the day ahead, it will continue to really be about policy. And we have Jerome Powell making his semi-annual speech in the US to the Senate. Again, given the 75 basis point increase, or 0.75% increase that we saw from the Federal Reserve last year, taking US interest rates to 1.75%, that will be closely observed today to see what is discussed, what the questioning is, and how, if any, there is further changes in the messaging from the Federal Reserve. I'll leave it there for today, but please do join us again tomorrow. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.